basically what generally happens is you have owner managers, they start to trade and the trade becomes profitable and the company now has reserves, cash resources on the balance sheet. So what do these owner managers start thinking? Most of the time they'll start thinking towards property investment. So residential or commercial property. I usually see residential a lot more, but it can be either. It can even be stocks and shares, for example. But basically they see that cash in the company bank account is sitting on the balance sheet and it's doing nothing, it's just sitting there. So what do? They start thinking of ideas and opportunities. So that's very good. Now, the worst thing they can do though is to make the investments in that company. So there's two worst things they can do. One is make the investments in that company, in the trading company. The reason for that is because if anything goes wrong with the trade, there's potential litigation, then those valuable assets are all under attack, they're all under risk. So that's one thing that definitely needs to be avoided. And the second worst thing that they could do is to extract the funds from the company and then pay large amounts of dividend tax, up to 40%. So even before you've bought any asset, any property, you've already lost 40% of the funds. So you have to effectively extract a larger amount, then pay the tax, and the after cash proceeds allows you to invest in property. So these are not ideal ways. Obviously, it depends on circumstances, of course, but these are not ideal ways, and there are better ways to structure. And one way, a very good way to structure would be by way of an investment holding company or a linked investment company, or another word, personal investment company. Now, these are all just fancy words, but the bottom line is what I'm trying to say is you have the trading company. We set up a holding company on top via a share for share exchange. So now we have a trading group. Now we don't want to buy these valuable properties in holdco. Why? Because then you run the risk of diluting the group. And if when I say dilute, I mean you change it from a trading status to an investment group status, and that is disastrous in terms of CGT for business asset disposal relief, and for IHT in terms of business relief. So you keep the holding the group, you keep it as trading, so that's free from inheritance tax, and then you introduce the linked investment company. And tax-free dividends are then sent from TradeCo to HoldCo to linked investment company to investment holding company, and all the assets, all the properties, all the investment takes place in the investment holding company. I hope that makes sense. I'm always happy to get on an initial no obligation 30-minute consultation call to see how and if we can help. And of course, inheritance tax always needs to be looked at. You don't just stop there. You have to look at the whole wider circumstance. And we can potentially introduce structures that can potentially mitigate and at times eliminate your inheritance tax. So owner managers, take heed, take notice of what I'm saying, and feel free to contact me. Thank you. Bye.